Hi, more revision in less than 15 minutes. Today we're going to look at the manufacturing account. So the manufacturing account focuses only on the cost of producing goods. Before time we will look at the sole trader and the partnership whose focus was to make a profit. But here we're looking at the cost of producing goods. And the cost of manufacturing involves we could separate into three general categories: prime costs, overhead costs, and work in progress. So the prime costs, also known as direct or variable costs. The overheads, also referred to as indirect costs or fixed costs sometimes. And the work in progress, which is sometimes referred to as unfinished work or incomplete work. So we're going to try to examine these categories. All right, so let's look at prime costs. Now, prime costs is the cost of production where we can trace prime costs of production, is where we can trace all the expenditure that went into the production. If we could trace it directly and specifically to the creation of the product, we call that the prime cost. In other words, the product has no existence unless these expenses, these costs that we expense, occur. All right, so like your raw materials, for example. If you don't have raw materials, then there's no problem. So that's what we're talking about. And we could also separate the prime costs or look at it in three components or elements. So we want the direct materials that we used, or as I said just now, the raw materials, the ingredients to make the product. So if you're making a cake, for example, you're going to want flour and bread, sugar, butter, eggs, etc. Right? If you were making a chair, you would need some sort of wood, all right, or metal. Then you have the direct labor input, and this will refer to those persons who are actually going to be transforming the raw materials into an output. So, for example, if you're making that chair, it would be the joiners who would be the direct labor. And if you're making that cake, it would be the baker or the cake maker, whatever you call that person that will be making cake. So that's our direct labor input. And then we have the direct expenses incurred. Now, these are expenses of necessity. In other words, if we didn't incur this expense, for sure we could not have gone ahead and make the product. For example, if you had to if somebody had a patent for a particular recipe or procedure and you wanted to use it, you would obviously have to pay for it to use it, right? So therefore, that would be a direct expense to you. All right, so that's our prime cost: direct materials, direct labor, direct expenses. So overhead costs, on the other hand, would be the sum of all the other costs that we incurred in production, except for those that we had labeled as prime costs. So in other words, the contribution of these costs are so minuscule that we cannot actually trace them directly and specifically to the product itself. Like when you run the electricity to say you turn on electricity to run your machinery, but you can't find the electricity in the product. I mean, if you were making bread, the only time you will find that electricity is that you put in currents. Yeah, sorry about the little joke. Yeah, but you get the point I'm making, right? So electricity would not be something you could trace to the bread, nor you can't trace the water or anything like that, but you know that you had to use it. All right. So these can't be traced specifically and directly, but you know that they made a contribution of some sort. So these are our overheads, right? And some of these overheads obviously are fixed and some are not fixed. Because if you had to pay a rent, of course, that'd be a fixed figure. All right, good. So let's also subdivide the overheads like we subdivided the prime cost so that we can have something comparable and we can remember them easily. So remember, the prime cost was direct materials, direct labor, direct expenses, and for the overheads, it's going to be indirect materials, which would be those materials that we use in the process, but they're not part of the product itself. And then there's the indirect labor, so the persons who are working in the factory area but not making the product, like the supervisor and the factory manager and the ancillary people who are cleaning up the place, and so those are indirect labor. All right, and then you have indirect expenses. So these will be the generic expenses that we are familiar with: electricity, water, repairs, maintenance, depreciation. All these things occur whilst we're in production, but they cannot be traced directly and specifically to the product itself. So they're all indirect expenses. All right, now there's this component called incomplete work or work in progress or unfinished work. And basically what happens is this only occurs because of a timing difference between the point when the financial personnel comes to take information, at the end of a day or the end of a month or end of a cycle or whatever, and the fact that the production is still going on, because most production runs like almost like a 24-hour thing. So you don't going to turn off the engines because somebody come and say, okay, well, find how much money y'all spent today. All right. No, you can give them an estimate of what is currently in the oven without turning off the oven. All right. So incomplete work refers to that work that is in progress, is not finished by the time you start doing your checking. All right. So what happens then is that the incomplete work that was brought over from the last cycle will be completed in this cycle. But the one that's incomplete at the end of this cycle, obviously, will be counted in the next cycle. So surely what we do is we just find the difference between the two to give ourselves a net position as to where we are at in this current cycle. So if I break it down again, you see that the cost of production, therefore, consists of these three components: prime costs, which is the materials consumed, the direct labor input, and the direct expenses. And then the overhead costs, which would be your indirect materials used, your indirect labor inputs, and your indirect expenses that you incurred, and then the incomplete work, which is the difference between the starting work in progress and the closing work in progress. All right, and just to probably summarize this again, let's go through it carefully. So first thing is that we're going to have prime costs, and those prime costs are made of the raw materials used, the direct labor input, and the direct expenses. And we are going to add to that the factory overhead costs, right, which would be our indirect materials used, or indirect labor inputs, or indirect expenses. And then we're going to add to that the work in progress or the incomplete work, which is basically the difference between the starting work in progress and the closing work in progress. All right, so now just to add a little to it, we know that prime costs plus factory overheads will give us manufacturing costs. All right, so just those two by themselves will be called manufacturing costs. And if we add the incomplete work onto that, then all three together will be called the cost of production. Of course, if you get a question that did not include incomplete work, then common sense will tell you that the manufacturing cost would then become the cost of production. So in a nutshell, that is your manufacturing account. And well, as I said, there you have it. So next time around, we will look at how to do the income statement for a manufacturing business. So thank you, and just keep revising.